Hey, this is Paul Hamilton. I'm going to go through perhaps the most famous publicly available federal tax return, and that's for Hillary and Bill Clinton in the past year. So, TaxSmack basically talks you through your taxes, hence the name, and hopefully gives you a better understanding of why they were what they were and maybe possibly how they could have been better, in which case you can amend your taxes. So, this is again for the Clintons. So, I'm just pulling out, well, I already know this stuff, but I also have their 1040. They're married, they file jointly, and they're both pushing 70 as it is. They do not have any dependents. Okay. So here is the top of what their 1040 would look like without all the personal information, including names and social security number. One thing about TaxSmack is it doesn't include any highly sensitive information like social security number. It does collect various income information, which again you can use real numbers or hypothetical if you want. Just referring back to again the actual 1040, which I pulled from hillaryclinton.com. So you can see this is 40 pages, but we only really need the first 2 or 3 pages to get everything we need. So, and if we look at this, this is exactly what I just showed you in the software, other than they have their names and a few other pieces of information. They're both donating $3 to the presidential election campaign. Very good. And then from the rest of this, I'm just pulling various numbers from down here. So let me scroll down. Again, you can say, well, there's a bunch of numbers here. It's going to take a while, but really we just need some half dozen really key numbers like the total income. So I'm going to enter that, go back to TaxSmack, okay, and enter, that number, 10,745,378. Submit that. And then there's adjustments. I won't refer back. They had self-employment taxes, or half of those to write off, 150,000 or so. And the program does quite a bit of work for you here. So it finds adjusted gross income. They could take a standard deduction, but they have quite a bit of itemized deductions. So we'll enter those. They didn't have medical. They did have property taxes of 98,244. It's more than most people's homes, but never mind. State income from New York was 1,369,277. High taxes in New York. They still have a mortgage. Interesting. $41,000 in interest. And they donated a little over $1 million, about $1 million of that, to their own Clinton Foundation. So, so they had over $2.5 million in itemized deductions. That will be reduced though because of their high income. So referring back, that takes a few seconds to run through. Let me just, again, this is the third page, Schedule A, and again, if you have a 1040 itemized, it would be your third page. Just pull these numbers, their various taxes, mortgage interest, donations, okay, and then that shows the total down here somewhere, okay. All right, let's go back to the tax program. Okay, well, all right, so it's taking another few seconds, but it's filled in. Adjusted gross income, their itemized deductions. Their taxable income is then $8.35 million. And this is where the tax program makes an assumption that all that was regular taxes, like from work or business. They do, in fact, have some investment income, so we're going to have to adjust that. Again, referring to their 1040. They, in fact, had $3,236,975 in taxes, so a bit less, which is due to how investments are taxed. Did you repay part of the Obamacare subsidy? No, they did not. Okay, I'll just keep going here. They didn't have any credits, so they don't have minor children or children in college or anything like that. So, so this will just be 0. Okay, do you owe any other taxes? Well, they did. They had business income, so they have to pay Social Security. They paid Social Security of about $14,690 each, and they paid Medicare taxes of $358,104. So the total other taxes is $387,480. Oops, type it here. 387,480. All right. Oh, sorry. That's there. See, I'm showing you how not to do this. So that would have been up in one of these boxes up here. Go back and delete that. So this is adding on top of their other taxes. So let me go, make sure we get the right number here. Okay. So yes, so here's their other taxes. They have it split out into a couple boxes. So that raises their taxes to 3.6 million and change. So head back over here. So that's 3,624,455. Okay. Federal income taxes withheld. They actually had over 4,664,245. And then they didn't have any other credits, so it's okay. And that's it. So I fumbled up a couple things there, but you can see even for someone who has this massive income, 40-page tax return, we just pull a few numbers from the first few pages and we're ready to go. So total income, the graphs basically show the breakdown of various things. Untaxed, they had over $2 million that's untaxed. It turns out that they had investments of about 84,000, and you can see that on the first page of their 1040 form. Most of it was regular income. So this is the graph that's kind of like the cool graph, maybe more than most people want to know, but really illustrates how the progressive taxes work. So everyone starts out in the first tax bracket, even if you make $10 million, and the first 10%, or the first $18,450 is taxed at 10%. And then you go up to the second bracket, and so on and so forth. They're in the highest tax bracket, so everything over about $465,000 is taxed at almost 40%, and that's where a lot of their taxes are coming from, the majority. So again, this is a breakdown. They didn't have any tax credits. Most people would have one or two, if you have children anyway, or some other special things. Their full tax liability, again, was a little bit higher because we had to throw in Social Security and Medicare taxes. So they paid $4.66 million. Their tax liability was less than that, so this matches up exactly with their tax form. They get almost 1.04 million back. So that's a nice surprise. I think they just rolled theirs over into the next year, but okay. So that's graphs. Those would be available for anyone. The phase outs are various tax savings, credits, or what have you. And you can see the ones in red are ones they're ineligible for because based solely on they made too much money. The yellow ones are ones that were reduced, so they still were able to itemize, but it was reduced by about $300,000 from about $2.5 million to $2.2 million. They're still eligible for Social Security. They're not drawing yet, but it would be taxed at, click on these and give you some information. It would be taxed at 85% is taxable. Okay. And then there's various tax topics. So some of these are pretty straightforward, like they were married filing jointly, not separately. That's almost certainly the right strategy. There's others that are a little more involved. So the AMT, the alternative minimum tax, is supposed to be a tax on the rich. And the way it works, though, is their regular tax was higher than their AMT tax, so there's no extra AMT tax liability. And again, there's various other ones you could click through here. Most of them don't apply to them because they don't have, again, children or someone in college, or they make too much money to be eligible for the earned income tax credit. Right. So there's just another summary here of their filing status and various tax data, and you could refer to these in future tax years. If you want to, you can start over. Okay, keep some of the information. So you could go through and say if you wanted to change that to add another $1 million, another speaking fee that was discovered, or whatever. Just want to look at another case, then you can certainly do that. So again, this is from TaxSmack. You can access it through taxsmack.com or usa-economics.com. And again, it works for anyone that has a 1040. You can enter your, like I say, about half dozen numbers, and it'll give you your tax bracket, explain to you why you get certain tax credits or why you were ineligible for others. And hope you check it out.